Welcome, everyone. Thank you for joining today's webinar. My name is Audrey Wittenberg, and I am the Associate Director at LIC, which is the Council of Loma that provides networking and resources, especially for small to mid-sized life insurance companies. Our mission is to help member companies improve performance through shared excellence. Today, we're presenting a very special webinar, Capturing the Mid-Markets and Millennials Profitably Using Digital Capability. And we're really excited to have this presentation today by a member company called SE2. And Vinod Kachroo, who is Chief Information Officer from SE2, is going to be presenting today. Vinod has 30 years of experience driving transformation at leading insurance companies like AIG, Prudential, and MetLife. He's the visionary responsible for leading innovation at SE2 to develop a technology platform that's future-proofed. He's committed to generating growth and ensuring that all SE2 associates not only fulfill their potential, but increase it. As speaker, author, and futurist, Vinod is not only able to create a vision for innovation, but he's able to take a complex idea all the way through planning and execution. Never satisfied with being a spectator, Vinod is an avid marathon runner. He pushes himself to see how fast and far he can go. Rules he applies when he's revolutionizing technology at insurance companies as well. So thank you, everyone. With that, I am going to turn the meeting over to Vinod Kachroo. Thank you, Vinod.
Thanks, Audrey, for the introduction. I'm going to start and I'm going to get to the first slide. Thanks for the opportunity for everybody to come and join me today and listening to this webinar. So I'm going to start by painting a picture around current life and annuity industry. We are going through a lot of change and we are going through a lot of challenges and opportunities which are changing the paradigm for us. So when I look at market, from a market perspective, our regulations continue to evolve, will always drive us, something like the DOL and the constant changes around what the DOL rule meant for us. Our business models continue to change. I worked for MetLife and I worked for Prudential. When I worked for those companies, we used to be a distribution company. We used to be a product manufacturing and risk management company. We used to be a technology and services company. If you look at MetLife today, now with the rollout of Bright House out of MetLife, they're basically just a product manufacturing or just a product and all the maintenance and technology, other work has been given away, and they don't own any of their own distribution. They are completely on an independent distribution model. So business models keep evolving. Interest rates has a huge impact on our business, our profitability, our pricing. Then there's a lot more need in the marketplace around agility and experimentation. The old world of where we launched a product and kept it for 10 years, 20 years. Now as the market conditions and market needs change, we want to be very agile in being able to get the products out of the door. I had a client who basically asked and said, could I launch 30 to 40 products at the same time? And then based on what works in the market, we start to scale those products. And then the other products, we basically put them in a closed block mode as soon as we launched it. A lot more product innovation, simplification of the products, and we'll talk about that a little bit more deeper as we go. And then a lot more new markets. How do we approach and get into newer market segments? The customer needs are changing. The customer is interacting with technology. Technology is inbuilt. As soon as kids are born, the first thing they get is their iPad or iPhone, and they know how to play their games and how to get to their YouTube videos. And we wonder how they do this, but they do it. And it seems like magic. And they're going to require a different level of, their expectations are very different. The digital customer engagement models are very different. And we're an industry where we really didn't have a touch point with our customers. We used to be a batch company. We printed policies and we sent policies across and mailed them. And you know what? They were a day late, a couple days late, didn't matter. Not anymore. Our customers are basically demanding a different set of experience. They're demanding us to do business with them in a multi-channel, omni-channel mode, as and when they want to do business with us, not how we as carriers want to roll out capabilities to them. Technology at the bottom is no longer a barrier. Technology is a big enabler. We just got to get smarter on how effectively can we use technology to help us drive those experiences and drive us getting products to those marketplaces. So when I look at digital, I look at data analytics, blockchain, a lot of work happening, and the potential of those technologies transforming the way we do business. One of my most favorite ones for life and annuity industry is the genomics. Genomics, again, as we get better and better at that technology and we keep optimizing, and I can get genomics, basically I can get my genome mapping done in less than a day and in a very cost-effective manner, and I know all my disease markers. Would life insurance still be a relevant product? Or do I need to go in and do I need to kind of combine life insurance with wellness at some point in time? So there's an opportunity that our business model might get disrupted as well. The video is gone. Okay. Audrey, are you guys able to see the video, the audio from me?
I've loaded
back
for you.
Okay.
Just need to know.
Perfect. So you loaded it?
Yeah.
Okay, I'm going to go back to then. Sorry about it. I'm going to log on back. So the technology. So sorry, why don't we go to the next slide, please?
Great.
So from a needs perspective, if you look at our life and annuity industry, we really look at two risks. You look at a mortality risk and you look at an income risk. And then we create products. Sometimes there are hybrid products which cross across life and annuity for those risks. When it comes to mid-market, we get exactly the same needs. And by the way, those needs are evergreen. Those needs are not going to go away. The need for mortality risk and the need for income risk is constant. How we satisfy those risks and how we create the framework around them is constantly going to evolve. I think that's a very important point that we all understand. Next slide, please. So this, we wanted to share some data. I think this is very interesting. I'm going to start on the left-hand side, where it shows how over time, from 84 to 16, more and more people are getting comfortable. Again, when I came into the industry long back, I was told very categorically that life insurance is something which is sold and not bought. It's not like auto insurance that you buy a sports car, you're excited and you're like, wow, I'm going to drive my car and somebody says, you need insurance. Okay, I'm going to get one. Life insurance is not like that, right? You're not excited to go buy. You have to have a real need. Someone got to sit you down and make you understand. But more and more people now over time have been doing their own research themselves and are comfortable when it comes to simpler products, be able to buy themselves. So we are seeing that trend on an increase. At the same time, there's a huge underserved market and a huge opportunity. When I look at the space, 12 trillion opportunity for the underserved and the market which is not even looked at. And every year that market size increases by almost 340 billion. And most of that market size, which is underserved, is in the mid-market. We're going to talk a little bit more deep on that as well as we go through the rest of the presentation. Next slide, please. So the buying influences I thought was very interesting. Everybody starts to look at an answer or a shift. They're looking and saying, I'm shifting from my captive to independent. I'm shifting from my independent to direct. I think when you look at our industry, it's very complex and there's a need for all the channels working together. Because if I'm buying a $50,000, $100,000 term policy or a simplified policy, which is pre-underwritten, $500,000, I might want to do it myself. But then there's a need as my requirements evolve, my family conditions evolve, my life stages evolve, that I have more needs for other additional products and others, and where I want to talk to someone in a call center, or I want to call an agent and have an agent come and sit with me and run an illustration for me, help me understand how some of those complex riders on these policies work. So my needs are not that I'm going to always be a consumer which is going to buy direct. So how do you make that 1 + 1 and make it 3? How do you take the current distribution channels and give them the digital tools, give them the digital analytics, and have them be able to sell in the same place and not worry about whether I'm going directly on a carrier website and buying product or I have a need to talk to someone in a call center, or I want to get an agent to come and sit with me and run an illustration. I think all models should seamlessly work and work well together. I think the data on the left-hand side represents that. So what's the most important thing when I buy a life insurance policy? Particularly, a lot of these influences are very much drivers for the mid-market, is trust. It says trust on the sales representative. I would expand that and say it's trust on the sales channel. So the sales representative might just be a website, or might just be a mobile app, or might just be an engagement model I have, which connects me to the carrier. And then if you go all the way down, and you will see, again, buying at the place of work. That's, again, another trusted source I have. If my work is recommending an insurance company, I buy from them. So how do you create trust in a relationship and connect more with your market? Whether you do that to an agent, you do that to an engagement model, that becomes very relevant. Next slide, please. So this shows basically the challenges in serving the mid-market and the millennials. So I'll go a little bit deeper into it. I'll start here on the right-hand side. It shows some of the basically areas where some of your life events or some of the communication channels, how they influence your buying pattern, whether you are a prospect who will end up in buying the product or not buying the product. More you are on the top quadrant, right-hand quadrant, the better propensity you have in buying the product. And then what are some of the challenges of the mid-market? So I always make fun of folks. I say there's a lack of disposable income. So if I'm a mid-market person making $50,000 to, let's say, $100,000 salary, and I got to go back and my share of the wallet got to go towards a life insurance policy, or I'm saving and you know what, my wife or my girlfriend says, hey, well, how about we go on vacation? As soon as my wife says, how about we go on vacation? I'm like, you know what, that's a much better return for me at that point in time than buying life insurance policy, because it's a lack of the disposable income at that mid-market level we have. Then you start to look at some of the millennial things here as well. We are talking about, I don't have enough education why I need life insurance. It's still the concept is sold, not bought. And then attitude towards risk for millennials is very, very different. They feel that, you know what, they are here to stay, and they don't want to really talk about them dying. It's kind of when I got married in my culture and I came from India, I had an agent call me and kept on insisting that I need to buy a life insurance policy, and kept on saying, what happens to your wife if you're dead? And my conversation was, I've not even finished my honeymoon and you're already talking about my dead. I'm not going to buy. And if I do buy, I'm not going to buy from you. So that's the kind of, you got to connect with them at their level. You got to connect with them through their community and through their network and the way they want to be connected. That's very, very important. So the consumer buying experience expectations, as we said, have changed as well. And then there is price sensitivity. Can I afford it? Not afford it. And sometimes speed is of importance. And sometimes I'm willing to give up on speed if you're going to tell me that I'm going to get higher value. So can I go through a fully underwritten model if I'm going to get a better rate? So those are the conversations which are very important and things we need to be thinking about as well. And then there are like sub-segments we talk about which are better served or not served at all because of the motivations of our products and how we compensate our distribution. Next slide, please. So now if we are looking at getting into the mid-markets, or we are looking at attracting the millennials as our customers, what are some of the key things we as manufacturers need to worry about? We have to simplify the product design. So I keep saying, like my own daughter, she doesn't know how to talk to me. She will text me faster than she can talk to me. She's never going to talk to a stranger. And if it takes more than 30 seconds for me to explain something, she said, Dad, I got it. And she figures it out herself. So if the product is too hard and you got these riders on top of riders on top of riders, we had to do that when we had our own captive distribution and wanted to go and compete in the marketplace. Not anymore. We need to make sure that we simplify those products and we create benefit bundling is what I call. You create various menu of options And based on a client's needs, you would be able to assemble those options very quickly and create a tailor-made policy for those clients. That's very, very important. Then we got to simplify the buying experience. So the digital engagement, I call it, it has to be no touch with hugs. And we are a very, very high touch environment right now. A lot of processing, a lot of handoffs. And how do we get to a real no touch through a digital technology straight through model? And we are touching a customer not because there are handoffs happening or there is lack of technology or lack of capability. We are touching the customer because it is the right thing to do. The customer is calling us and wants to understand how a particular feature works. Now the customer is calling us because they want a death claim settled. And at that point in time, whether the customer hits the button or we hit the button in our call center, I think it is a material because at that point in time, that point in need, that's why we exist. We want to give the best possible customer experience to that customer when they are in a point of need at such a time. And then we got to simplify our pricing model. One of our biggest issues is our pricing model. When you get to the millennials and mid-markets, you are stealing a share of the wallet. They have very, very little disposable income, and you're competing with multiple needs and priorities they have. So if we can price the products appropriately and make it very simple and easy for them to buy into those benefits, and those benefits can scale as their needs scale and as their life stages scale, that's very relevant. And that's something we haven't done as an industry in the past. I could sell you a term, and then you become rich and you hit a lottery and you got hundreds of millions of dollars. Now I can sell you survive at 6 seconds to die. But I can't graduate you from one simpler product and give you those stages as you're growing as well. A lot of a la carte, a lot of bundling, that has to happen as well. And then we got to empower the distribution. We got to give distribution better tools. We got to give them better capabilities that they can go after this market. They rather sell to a large policy to a large high net worth customer than sell a small policy where their margins might be very low and the commissions may or may not be there. How do you motivate them to go after that channel? And how do they get compensated to go after that channel? Today, the biggest reason we are not successful in the mid-markets is we don't have a viable product and we don't have a viable distribution. The need is there. The need is the highest. If anyone who needs our products better, from an income risk or from a mortality risk perspective, it is the mid-markets. And how do you catch them earlier? And that's where the millennial and the millennial experience comes into play as well. So be digitally integrated with your customer's life. And I'll get into that in the next slide. Let's go to the next slide, please. So we talked a little bit about the engagement model, that we have a little engagement with our customers when we start to make a sale to them. And then there may be absolutely no touch point with those customers till a claim shows up, or they move and they got to do a change of address, or their life conditions change and they are changing their beneficiaries, unless you are in a product where you got a lot of variable part and you are doing back and forth trades and stuff like that. So my suggestion is, as you look at digital and you look at this marketplace, rather than be a life insurance provider, how do you become a live life provider? The joke kind of I crack with my own friends is, would I want to buy the best life insurance policy for my wife that she can enjoy her life after I am dead? Or would I rather enjoy life with her as I am living and live longer? If you look at from our brothers in the PNC and sisters in the PNC industry, they have driven a lot more value where they are trying to get to what they call zero claims. How do I decrease the price of my product? How do I get better margins by not having a claim? How do I prevent claims? I think we got to go with the same mentality and start to say, how do I help people live a better life? And as they are living a better life, I enable that through giving them life insurance product as well. So think beyond being just a life insurance provider. Be an integral part of their policyholders' life. Support and enable how can they live a better life, and create an ecosystem. So I'll get into a few technologies, tools. I'll even give you examples of some other providers which are helping us create that engagement model. How can I create basically personalized products that whether you're looking at income risk or mortality risk how could I create lifestyle-based term products? So based on my lifestyle, if I have a healthy lifestyle and I'm motivated to continue my healthy lifestyle, I always go to gym, I always eat right, would you keep giving me discounts? It's similar to a mortgage, like a variable mortgage product. My premiums could adjust up or down based on am I behaving right, am I not behaving right? How do you motivate me to behave right and live a better life? Location-based and short-term products as well. I like the last one, situation and event-based products. I think that's going to be a big thing for millennials. They wouldn't understand why they would need a life and a mortality product. But when they're doing that big bungee jumping where alligators are in the pond or they're jumping off a plane, can I just buy a life insurance policy just for that instance and get underwritten instantly as I am boarding that plane and jumping off the plane? I think those are going to be relevant experiences and relevant concepts for us in future. How do I make life insurance and annuity a product which enables a better life? Like when I look at my computer where I am trying to do this presentation from, it says Intel Inside. How does life insurance become an Intel Inside for a lifestyle rather than just become a product on the side, a point solution I'm selling? Next slide, please. So we need an integrated digital framework. And I'm going to talk a little bit about how do we enable it? What does it really mean for us? When I say digital technologies, how do we create an integrated digital framework for enhanced customer experience? Whether it is capturing your lifestyle data through wearables, giving you an omnichannel experience, collecting a lot of data which is out there, more from industry sources. When I say social, it's not snooping around people's Facebook or their social accounts, but there's a lot of data out there from your communities and from reliable and valid industry sources. And then how do I create a partner ecosystem and continuously keep innovating and challenging our current business model and set up the right architecture which enables all this? So become an integral part of customers' life, engage better through their journeys, and create a personalized experience for our customers, and also give them the choice of any channel or any media or any mode they want to be working with us. And also try to get them young and evolve them into the final products they need to be doing as well. And then more insights for operational effectiveness. As I am creating more and more services for them, how am I optimizing my backends continuously to make sure that I can deliver better service models for them, because that's what they are buying into. Next slide, please. So there's a lot of innovation which is happening out there, a lot of startups, some good money going after a bunch of startups, and then there's a lot of buzz and some bad money going after startups as well. Everyone is looking at the word innovation in life and annuity industry has become a buzzword. Everybody's trying to figure out what they need to be doing. So I've just put some sample companies, and in no way or mean am I recommending any of these companies, or I am saying these are the only companies which are out there. I just wanted to pick some illustrative set of companies. We work with a bunch of them within my company, SE2 as well. So I'll use examples of 2 or 3 companies we work with, but rest of them, it just shows that the space is continuously evolving. So when I look at something like Life.io, it gives me a great engagement model in the front to engage with the consumers, their lifestyles, collect that data, and then create some unique underwriting algorithms that I can underwrite based on what they do every day. Now I am motivating them to behave well every day so that they can live a longer life. I look at something like Blueprint Income. It is also one of our partners where they are looking at and seeing how do I create this experience and create innovation within the income risk side of the house and take monies in drips and drabs through payroll deductions, small amounts, and create some unique opportunities for creating annuities which can give you longer term income protection as well. So very different approach, an innovative approach, and they are creating a lot of education material, educating consumers in their needs and capturing them up front, and then placing those risks with the carriers as well. I recently met with a company called Clarito. amazing concept. This company was born out of health exchange, and they have all of the medical data, and they are getting authorizations from consumers and enabling these health exchange data to now create unique underwriting algorithms that you don't need to go and get body fluids. You don't need to be dependent on RX databases. So it takes the validity of the data we already have been getting from various sources, multiple sources, and get me the data in one source and create some unique algorithm opportunity that I can start to underwrite in an instant rather than go through a whole process I need to go. So these are kind of disruptive concepts. And by the way, these are not the only concepts, and we work with a few more companies in here. The concepts are going to keep coming. What is the secret sauce? The secret sauce is, do you have the right infrastructure and do you have the right architecture that as these innovations come in the marketplace and start disrupting, could you leverage them and plug these into the infrastructure and architecture you have? That is the biggest thing. So I won't talk about all the companies here, but it gives us some representation of kind of companies in various spaces and how they play. Going to the next slide, please. So I'm going to use now SE2 example on what we are doing in SE2 and how are we enabling this infrastructure and this architecture and what does it mean? And I'll take it to life through a bunch of case studies then as well to show how we are doing that. That kind of will bring this whole solution set we kind of talked about. We talked about an opportunity, talked about what the solution is needed, and now we'll show you how we can come and bring that solution to life as well. And towards the end, and I'll meet another 15 minutes, then I can take questions and we can make it a little bit more interactive with you guys as well. Next slide, please. So one of the first things we did in SE2, where we had a very innovative and a distributed architecture, we were one of the first companies to get rid of the mainframes and completely get onto a distributed architecture, but that was more than 10 years back. What we did in the last couple of years was rewiring that architecture and creating basically an infrastructure which can scale and creating an architecture whereby you're segregating your systems of record, your systems of integration, and your systems of engagement. And no matter what you're doing, there is one gold copy of truth or a business process. So whether I am a call center agent, I'm an end customer, I'm a machine-to-machine interface with a broker, or I'm going through a web or a mobile site, or I'm a partner ecosystem like DTCC or anything else, or I'm a wearable technology, you can plug and play into the same infrastructure and architecture. So when you talk about digital, it means different things in today's world to different companies. A lot of companies are looking at digital as being a channel. Absolutely, yes, digital is a channel. A lot of people are looking at how I can create a digital experience for my distributors and new business and underwriting and create some efficiencies there so that I can make faster, quicker, and better sales. Yes, that is digital. But in reality, digital is end-to-end. Majority of the people aren't really looking at the hard part of the digital journey, which is looking at your backends. And some companies are, but then they are in isolation looking at admin system replacements. And they spend years and years doing that, and they spend considerable amount of time, and then they still don't get to the end answer, and then they find the integration become very cumbersome. And a lot of people are only focused on the front. So my metaphor for that is our backends over time have become very complex. And I call them a pig. Everybody's trying to put lipstick on the pig. What we did within SE2 is we started with the pig and we digitized the pig. And now we are coming admin system out and enabling this architecture, which can now integrate this and enable this whole ecosystem for us and create an end-to-end digital architecture. Not just a digital experience, it's about creating a digital architecture. So with that, I'll get to the second slide, please. So I will show you this architecture come to life through this case study of how we created kind of industries first, what I call digital direct life platform, a common chassis, which is end-to-end 100% every component digital. And we completely opened up our backends by digitizing them, creating an interface architecture around them, and creating APIs and being able to harness those core capabilities of backend systems right from the front end. So let's start by the top picture here, where it shows SE2 carrier clients, whether it's a customer, it's a producer sending us an app, and that app could be, as I talked about, let's say a complex product. It could be survivorship second to die, and it's a high net worth customer. Somebody sat in front of him and filled it on paper with ink. You could have all that paper app come in, or it could be a millennial on their mobile device answering 20, 30 questions, and we're gathering the rest of the data from the industry and completing their app, and a complete electronic app coming in. And then everything in the middle. It could be iPipeline, eBix, could be any of those apps coming in. It comes into SE2 the same way. Even the app which was filled by hand, we will do smart, intelligent ICR, OCR. We will have bots do a bunch of validations. We'll try to make it a no-touch platform, even for the high-touch manual models which are out there. And it comes in, and then the same chassis, whether I am doing a direct-to-consumer life product, it's a very simplified straight-through product, which is going to get issued in 5 minutes, or I'm taking a highly complex, very complex underwriting model, where it might take me 15 days, 20 days to underwrite and gather all the data. The same exact chassis is servicing and working for all these models, because what we invested in wasn't just another green field to the side digital architecture. We took our current architecture and we digitized it. So you will see here, whether it is integrations with external vendors, it is running your own compliance and suitability, it is integrating with other providers, whether it is digital print providers or admin providers. It is expanding your payment processing to be able to collect PayPal, Apple Pay, or credit card payments. All of it is integrated into this common chassis and creates that end-to-end enhanced engagement model, enhanced user interface, and gives you a straight-through model. So this is what I call no touch with hugs. So you do not really need, it's not because of lack of technology, it is because you want to have a touch point, or you want to have a stop where you're gathering more data, or you are having better underwriting decision being made. It's all digital, and end-to-end, we work with the same process. And it is a multi-channel process as well from a front-end perspective. So I showed you the architecture, then I showed you a kind of a case study on how for life, we are bringing an architecture to life as well. Next slide, please. This is a very important slide. We created it 2 years back as we got onto our journey for digitizing and modernizing our end-to-end platforms. We looked at it and said, what are the key aspects? What are the key themes as a life insurance company starts to look at digital? So it is about the digital customer experience, but it is also about backends. It's about backend automation. It's about robotics. It's about creating the efficiency. And then it's also being able to future-proof your capabilities, where you can plug and play into future capabilities, whether that is robotics, helping an advisor. A lot of people are also looking at the theme and saying, oh, robo-advisor, they're going to replace an advisor. Maybe, maybe not. And maybe not. Would I rather have a robo-advisor as a tool and give it to an advisor who has great relationships and linkages out there and has great trust already built, and then create consistency of decision-making for him by leveraging my data and algorithms, which can always keep getting refined as more data comes in, or I can enhance those algorithms. My need to train that agent now becomes less and less because I'm influencing his behavior through a robo-advisor, which is not robo-advisor interacting with the end customer, but a robo-advisor enabling an advisor to service and give the right advice to the end customer. So those are the kind of case studies and scenarios you need to be looking at. Then in the middle, it became very important to look at enablers. Again, this is a bunch of technologies. I'm not going to go into all these technologies. It is around how do you create an architecture, whether it is robotics, it is creating a straight-through model in your architecture. Our goal was to digitize the data at the first touch point within SE2 and then let it go straight through all the way to the end. And here are a bunch of technologies we wired together on top of our platform to enable it. And then we also looked at the partner ecosystem, okay, whether that's an underwriting platform, we can plug and play, open architecture in that underwriting platform. So as the needs of our various customers change, we can plug and play into different underwriting platforms or underwriting models, whether that is an engagement platform as Life.io. And then the last one at the bottom was very, very critical, which is how do I tap into the talent? Not every best person is going to work for me. And not every best person is already in my organization. And if I'm scaling my business, I need to have a talent pipeline. So I created this partner ecosystem, whether that is platform play with Accenture and Fast, a lot of actuarial skill set, product configuration factory, integration factory with Deloitte, running my applications and my infrastructure with NTT Data. And then as I look at more domain-specific capabilities, creating that with emphasis, we were within SE2 able to scale in last 2 years, double the size of our team. So we considerably hired a lot of smart people, but we didn't need to hire all smart people ourselves. We tapped into a partnership ecosystem and we were able to double our bandwidth in just 2 years. That becomes important as well. And the need for talent and the need for the right talent at the right time will be very, very critical for you. So it becomes very important that you have a partnership ecosystem created which can support. So this is what we did in SE2. Next slide, please. So this is one of my last slides, and this slide shows digital is not just front end, digital is not just cool stuff and toys. It's also how I continuously keep optimizing and revamping your back-end processes. So when you look at SE2, our business model, we are one of the largest providers for new business. We do a lot of open block business, but bulk of our business is closed block. And that closed block, I got to constantly drive efficiencies. How do I leverage now digital technologies to keep making my closed block model efficient every day and continue to drive efficiencies and drive that? I call this journey to digital ops. How do I create the digital ops and have a journey to the digital ops? Again, this is a 2 to 3 year journey, but here's what we are doing. Whether it is through AI and robotics, it is through creating straight-through processing and process simplification. It is also creating a lot more self-service. I can keep optimizing my call center forever, but I want to analyze and say, why are people calling me? If a distributor is calling me, I know there's a problem because distributor doesn't want to call me for service needs. They want to be with the customer selling. The fact they are calling me and not able to self-serve themselves tells me something is wrong and tells me I got an opportunity to do something different. And why is customer calling me? Why can't customer do it themselves? So that no touch with hugs is the model we want to get to, but you go there by enabling the right capabilities in self-service and prioritizing those capabilities through data insights and analytics. Okay, it should be insight driven. There should be machine learning. How do we keep refining our underwriting models and keep changing the underwriting algorithms as we go forward on a day-to-day basis? And it's not a one-time implementation, but it's a constantly learning system which enables this kind of a paradigm. Next slide, please. I think that was my last slide, so you can open it up for questions. I hope I didn't go too fast.
No, this is Audrey. I'm going to read the questions that have come in. The first one, great presentation, Vinod. What do you see as changes required from a product's perspective to service the mid-markets?
So we have to, very important, I think the industry over the last 3 decades plus, we enhance and increase the complexity of our products by putting riders on top of riders, because that was a strategic advantage for us in the marketplace. We had our own captive distribution, And we wanted that distribution to have as many bells and whistles and tools in their toolkit that they could go and compete with the rest of the market. Not important anymore. More and more we simplify our products and make them easily. And by the way, when you look at those products, majority of the times consumers did not really understand what they were buying. And most of the time, distributors may not even know what they were selling. So it created a huge complexity in our business model, but it was a requirement because we wanted to one up the competition. Now, the need is to simplify. That doesn't mean those riders or benefits were not the right riders or benefits, but the way we bundle them in pre-manufactured products, the complexity was mind-boggling. Simplify those benefits, simplify those policies, simplify those riders, and then based on the exact client need, figure out an architecture that on the fly, you can bundle those benefits, those riders, and those capabilities you have, coverages you have, to create a custom solution. I want to say solution. It's not a policy, not a coverage, because you are looking at people's life, you're looking at their mortality need and their income need. I can get a custom solution for a client. Next question.
Thank you. The next question is, you covered a lot of technologies. However, which technologies do you see as being the most critical, and how would you prioritize it?
So my pet peeve in the industry, I have been a long time in the industry, is our biggest asset, very close or maybe even higher than our people. Okay, domain experience and domain knowledge and experience of our people is the biggest asset we have. The biggest asset we have is our data. Most of the insurance companies have a lot of data they are sitting on. How quickly can I learn from that data? How quickly can I get insights from the data? Combine that data with all other market available data I have. That's what people call big data, the buzzword. It may mean something, may not mean something, but all it means is I got a lot of data internally, I got a lot of access to a lot of data externally. How can I make better business decisions by getting better insights quickly? And I can trend the data. That's what analytics is all about. I can trend the data and be able to create a business advantage for myself in the marketplace, right? It changes our underwriting model. It changes how we sell. It changes who we sell to. It changes how we serve our customers. It changes everything for us. So creating those better data processing capabilities is going to be the key for winners and losers. This is where when you look at companies like Google, Facebook, Amazon, they have done really well, and they have created a trust and a touch point with the end customer. And you know what? It might not be a bad thing that they become our distributors, because they have a best touch point and trust with the customer already. If we can create the right products, we can sell through them. Again, I'm not predicting or saying they're going to enter the market or not enter the market. They still have balance sheet limitations and barriers right now. But from a distribution perspective, I think you got to know your customer and got to know your customer the best. Does that answer the question?
Great. I believe it does. And I've got another one for you. Can you suggest any workflow management systems for in-house integration?
So I'm going to give I'm a CIO, but I'm going to give a non-technology answer. Because when I was at MetLife, I implemented the system from IBM FileNet. Now I'm here at SE2 and I'm implementing a system from OnBase Highland. We a lot of times, and particularly people make this mistake when they are going and picking an admin platform. We spend an awful amount of time figuring out and selecting the technology. We do not spend enough time on why we need that technology, what are we going to do with it, and how are we going to implement it. Spend a lot more time thinking about that. And majority of the times you'll see most of the products in the market will meet 80% of your needs, and 20% needs might be relevant, might not be relevant, or you may have to customize those 20% needs, but think hard before you customize. Try to take an out-of-the-box solution and don't take your existing process. When you look at digital, digital is not about marginally changing what you do today. If you're going to marginally change what you do today, the transition is going to be painful. You have to disrupt and you have to reimagine. Your new process, again, the example I gave, I can keep fine-tuning my call center, or I can figure out how do I eliminate my call center. Eliminating my call center is digital thinking. Fine-tuning my call center is operational thinking. So it's not that one is not required than the other. You have to make your call center work, okay? Obviously, if there are issues and there are opportunities to do it better, you should be focused on that. But when you look at digital, you got to completely transform. So from a workflow system perspective, you would have seen on my chart, we are using on-base Highland. It's a decent technology, but if you have a complex process, you're going to struggle implementing it. I think we have had pretty reasonably decent runway implementing that technology. And we are not looking to just create an image and workflow platform from that. We are looking to create a straight-through and a digitization platform from that, where once I have the image and workflow pieces done, and I have the data coming in the digital format, I'm looking to replace robotics. Currently, we are replacing humans with bots. Eventually, we're going to replace bots with straight-through. And we already are on that journey and have made some progress. Next question, please.
So how difficult has it been to support your existing customers and also move forward on your digital journey simultaneously?
So I think it has been difficult. So to be very candid, 3 years back, our business was scaling in a very rapid manner, and our infrastructure wasn't keeping up with that scale. So we had to really jump in and come back and help us scale our business, scale our infrastructure, scale our organization. As we made the investment, how we made that investment, we decided to start from back to front and start purely at a digital architecture. And the way we are doing it is we're not building the new world and then migrating to the new world. In our world, that's very difficult. We are taking piece at a time and modernizing that piece, and have achieved in the last 2 years considerable progress. And we got another, I would say, 6 to 9 months to complete our transformation of all the components. But majority of the components in the digital architecture have already been implemented. And we are using it for a lot of new business now. And for our closed block, we'll start to move that pieces on this as well. But it is, again, being one step at a time, incremental, and thinking about in a transformative mentality as well. Some cases, you got to disrupt, be very transformative, but when you're enabling the architecture, you got to do that piece at a time.
Very good. Next question is, Vinod, when will a life company step up and create fun brand messaging like Geico, Progressive, et cetera, on the P&C side?
I think we're already there. You launch a product on my platform, we can create some cool and jazzy stuff. I think if you look at the global marketplaces, I think Japan, some of the companies I have worked with there have some really, really cool advertisement already going on. I look at some of the markets. I look at the Asian markets. I think they are ahead of us in many ways. We have still been very conservative in the North American marketplace on this space, but I am hoping soon, because these are very critical and important products. What we do, I think we got to get to the fundamentals of what we do. I think on the way, the complexity has made us not to connect well with our customers because we couldn't explain what are we selling. That's why MetLife had Snoopy for a while. It was cool. It was on my business card. I loved it.
Snoopy is fun. Okay, the next question is, do you see a risk of cannibalizing traditional channels as you look at this kind of an approach that can be direct to consumer?
The answer is no. I think everyone is concerned on it. Everyone is excited about what the new direct-to-consumer things are out there. But what people are doing right now is very basic and very simplified stuff. So you have to get on a journey. The need for complex products isn't going to go away. You have to graduate to those needs. So when you look at a lot of those startup companies and they are doing simplified issue term policies and everyone says, wow, they got up and running the whole company in 4 months. That's true. But I didn't really need an admin system. I needed a basic premium calculator, which is 4 rows in a spreadsheet. And that's my admin platform. Then claim comes in and I'm validating if policy exists in the database or not. You start getting to the more complex side of the house, and then you start getting into what I was talking about, creating all these benefits and bundling those benefits together towards the complex needs of some of the market. That model isn't going to work and scale for me. So it's exciting to get started. It's great for learning. It gives you fantastic learning, fantastic start, and try something new. But if you want scale, you want to be able, that's why we chose to create that simple model, not on a spreadsheet, but on a full-blown, robust admin platform. Our admin platform can run that spreadsheet process all the way up to the most complex process. You want to sell a variable life policy, or you want to sell a basic life with nothing on it, it's the exact same platform which works. And that to me is very important, because at some point, your business needs are going to diversify and you're going to run out of steam if you're sitting on the spreadsheet.
Do you have any of your clients that are pushing you digitally?
Yes, we do. We have a bunch of, again, I won't name clients. We have a direct-to-consumer life offering. We're going to be launching in April 4 products with one of the large insurance companies. We also are becoming a digital partner for a bunch of our clients, where they have taken our team members and they have created these agile teams, 8 to 10 people, who are driving a lot of digital capabilities for them. We are co-innovating simultaneously, and we have given them those 10 people teams, and they are riding our chassis and building some unique capabilities for themselves in the marketplace, leveraging our capabilities and our skill set.
Next question. You spoke about the partner ecosystem. How does that help, and how does it connect with SE2?
I think that's the most important part when you look at digital and you look at innovation. There is going to be a lot of new disruptive things which are going to come in the market. I'm not worried about those small scale spreadsheet admin companies and doing end-to-end everything, but I'm excited about new disruptive things I talked about, right? I talked about that healthcare thing, being able to come and change our underwriting model. So we have created an open architecture. We can plug and play these companies as they evolve and come. And whatever next disruption is there in the marketplace, I want to be able to plug that as quickly as I can into my environment. I think that's the key thing. So you have to understand that you're not going to invest in all those companies. You're not going to own all those companies. And by the way, you are not going to create those capabilities internally either. As those capabilities get created, your success depends on how fast can you tap into those capabilities and change your business model to leverage them.
Next question is, with direct-to-consumer partnerships and innovations at reinsurers, could life carriers be disintermediated by reinsurers in partnership with InsurTech and or TPA firms?
So it's a wrong question to ask me, because all my customers are insurance companies, and it's hard for me to say anything about them. But the possibility of models getting created, yes. I don't see a TPA ever getting into the business of what an insurance or a reinsurance company does. To me, insurance companies are more and more product manufacturers, and they're going to stay to be product manufacturers. Can reinsurers disrupt them? I would think there's a possibility, because you need large balance sheets. To me, insurance companies are balance sheet companies. and you need someone with a strong, big balance sheet. Then you need someone with good understanding of technology, understanding of business process. That's where SE2 fits in. We are never going to get into a balance sheet business. That's something our clients will do. And whether reinsurers will get into what insurance companies do, that's between insurance companies and reinsurers to figure out. Possibly yes, but not for me to comment.
Okay, thank you. I have another question here. Is any other country or region further ahead? And what are some of the learnings from there for us to learn from in the US?
I would say Asia is much advanced. They are disrupting and innovating at a faster pace. I would say Europe is doing fairly decent. I would say North America is not leading in this space. So we are still in the catch-up mode. If you look at our industry, within insurance, life and annuity in US is in the catch-up mode. Our P&C friends, both on the retail and the commercial side, have done a lot of disruptions and a lot of innovations. LNA is in the catch-up mode. And within the global, North America is in the catch-up mode. So we are catch-up of catch-up. But we have an opportunity to make a big leap.
Great, thank you. And I have one more question, and that is, has building an ecosystem made up of so many outside technologies watered down your IP?
Not really, because my IP is my core domain knowledge. My IP is the integration platform. My IP is how I am wiring my business process. As long as I am creating the orchestration and they are playing into my orchestration, it does not dilute my IP.
Well, great. We're coming right up on the hour, so we're going to close questions for now, but I appreciate those of you who submitted them. And I would like to give a big thank you to Vinod Kachroo. Thank you very much for presenting today. And thanks to all who attended. We appreciate all of you being here. We're going to email all of the attendees the presentation materials, and we'll welcome any follow-up questions. You can email questions.
And Audrey.
Yes.
Just one comment. If anyone has a question and they want to email it to me, my email address, I think, was the last slide.
Perfect. Great. That's wonderful. Feel free to email Vinod any follow-up questions. And thank you very much for your time today. Everyone have a great afternoon.
Thank you very much. It was a pleasure talking to you all.